Members, want to thank everyone for joining us. We'll be going over today the TradeXchange Week Ahead webinar. We want to thank everyone for joining us. I know it is Super Bowl Sunday, so we'll keep it short. And as always, this is recorded and will be posted on the news desk and our social medias. So a quick recap of last week. The past week, we saw weakness in all three indices, with the NASDAQ taking the brunt of the hit down 2.4%, the S&P 500 lower by 1.1%, and the Dow down about 1%. One other area that saw weakness was the small cap names. The Russell 2000 index dropped by about 3.5% for the week. This week's only strong sector has been in energy, with crude oil up about 9%, hitting that $80 level. We saw the strength following comments from Russia that they are looking to cut production in March by 500,000 barrels. So we are seeing some strength this week in areas that have seen recent weakness. Case in point, crude oil and natural gas. So we'll go over that a little bit more later on. One thing that we continue to notice and watch is this inversion of the yield curve, which grew to its widest margins since the 1980s. So people always ask us, what is the inverted yield curve? That occurs when the bond market, when the long-term interest rates are lower than short-term interest rates. The other question is, why do traders follow the inverted yield curve? The inverted yield curve is often considered to be a signal of a possible recession, suggests that investors are less confident about future growth of the economy and therefore more likely to demand lower yields for long-term bonds. The inversion of the yield curve has accurately predicted the last 5 U.S. recessions, but please keep in mind, it is not a guarantee that a recession is coming. So that's what the inversion of the yield curve means. We post that in the news desk every morning because it is an interesting indicator that we've been following for quite some time. Throughout the week, we continue to hear the same thing from Fed speakers. The inflation target is 2%, and it will take some time and will probably be a bumpy road. Some Fed speakers even mentioned that we will not hit 2% until next year. The market participants, though, believe that there is a possibility of a rate cut this year. Why? In our opinion, it's always great to hope. And that is what we believe is happening in this market environment right now. The hopium trade is back. It's strong since the beginning of the year. The volatility is clearly here. We had a week of basically non-events outside of Fed speakers, yet we saw some intense volatility in these markets. With inflation rising in China again the past week, it is all about the U.S. and the CPI report on Tuesday. We are expecting a print of 6.2% year over year, with a print of 5.5% on the core side. We believe this report could easily dictate the next move in markets, as earnings season is basically coming to an end. So now we're going to go over the week ahead report. First, upcoming U.S. and world events. On Monday, not much on the U.S. side. We do have the Japan GDP on watch. Tuesday, we have the CPI report, as well as some Fed speakers, Logan, Williams, and Barkin. On Wednesday, we have on the U.S. side, economic data-wise, we have retail sales, industrial production. And on the U.K. side, we have the CPI and PPI. So that'll be interesting to see how activity is on the inflation side over in Europe and the U.K. On Thursday, on the U.S. side, we have the PPI final and the Philly Fed Manufacturing Index. We also have Fed Speaks Mester, Bullard, and then we have Mester again in the evening. So Mester will be speaking twice on Thursday. On Friday, we have the U.S. import and export prices, as well as Fed Speaks Barkin. As always, members, we have your company events for the week. Companies in regards to shareholder meetings or analyst or investor calls. We also have your top conferences for the week. As always, members, you can always reach out to us via email or ask the desk to get an understanding if there are any specific companies that will be presenting during these conferences. So you can always reach out to us and we'll give you a clearer breakdown. Looking at your economic calendar for the week. On Monday, nothing on the agenda, members. It's going to be a clean sweep of a day on Monday regarding economic data. Tuesday, we have your CPI. And as always, after hours for the oil traders, we do have your API crude oil data. We also have Fed speakers Lori Logan and John Williams. It's all about Tuesday, members. It's all about that CPI report. We'll see how that number comes out, if it will be hotter or colder than expectations. That could be that could give the markets a directional move for the remaining short-term future. On Wednesday, we have your retail sales, Empire State Manufacturing, industrial production, housing market index, and as always, for the energy traders, we have your EIA petroleum status report. Thursday, as always, every week, we have your initial jobless claims. We have your PPI final demand as well this Thursday. And for energy traders, we have your nat gas report at 10:30 a.m. On Friday, we'll be watching this import and export prices. Another inflationary print that is has been watched closely by economists and traders and the Fed as of late. On the international side, we have a international calendar. Not that much of a busy week, except for on Wednesday. Earnings season continuing, but as you've seen, members, a majority of all the top earnings have been reported already. But the list is here. As always, we do bold out some of the big names that are coming up this week. On Monday, we'll be watching for Palantir PLTR. Tuesday, you have Cleveland Cliffs, Coca-Cola, pre-market, after hours. Not that much. Airbnb, Herbalife. So the list is there, but it's not as busy as it has been in the past few weeks. Your fear and greed index, look at that number, 70 on the greed side. So that greed is in the markets. We can tell by the volatility that we've seen since the start of the markets, but clearly the mindset is on the bullish front, as you can see across any of these media stations these days. The amount of bullish contributors has surpassed the bearish mindset in the past few weeks to the beginning of the year. Your weekly sector performance, we did mention earlier that the only strength was in energy, weakness across the board on every other sector, with keying on communication services, consumer discretionary, real estate, and materials. Agency comparisons to COVID, still stabilized above these levels that we've been watching for quite some time. We added the sticky price consumer price index chart since we are watching the CPI this week. But just look at that number, members. It's hitting levels not seen in we can't even go as far back as it possibly could. Your target rate probabilities, members, for your March meeting. As of right now, the odds are for over 90% of a 25 basis point hike. Your 10-year Treasury constant maturity minus your 2-year, which we discussed earlier on the inverted yield, you're at a minus 0.76. Taking a peek at your year-to-date returns, lumber took a little bit of a hit this week, down about 20%. We saw some not much action in regards to markets, down a few percent here and there. Coffee with a small uptick. We did see some strength, though, in gasoline, up about over 7% for the week. Crude oil up about 9% for the week. Nat gas, we did mention that a little bit, but nat gas has been getting destroyed since the beginning of the year. I believe this is one of the first weeks that we've been seeing an uptick, up about 4% on nat gas. Your AAII Investor Sentiment Survey, look at that jump on the bullish mindset from 29.9 to 37.5. Look at that drop on the bearish mindset from 34.6 to 25%. So clearly, members, the the mindset is on the bullish side. It's seen through this survey. It's seen through that earlier fear and greed index. It's seen across all media stations. So the mindset right now is that hope trade, that inflation is not as bad as what it seems. Recession, if anything, will get a very soft landing. So that is what we're watching, and that's what we're seeing right now when it comes to the sentiment on Wall Street. Sector Outlook Weekly as well. Another breakdown on your sectors from your year to date as of this week to last week's numbers. The clear pop we did see has been in that energy. So that has been the only strength that we've seen the past week. IPO lockup expirations, your expected IPOs, and your FDA calendar. Remember, as always, we always try to update these going into the morning mashup every morning. Just follow up on that if there are any changes to these reports. Now, a quick peek at your charts, and then we'll just go over a few questions that we have and go over the weekend email regarding the updates to the news desk. Taking a peek at gold, members, no changes to the chart. Once we saw that break last week, and we saw that week is trading right to that support level, it just hung out at that level throughout the week, closed right at that point. So we'll watch this going into this week as we do have the CPI report. Members, keep in mind that CPI report can change these charts across the board. So we won't just keep mentioning that, but keep in mind that that report could adjust these charts going into next week. Your SPY daily, members, no changes to the chart as well. Not that much action, but we are below that support resistance range right here. We got the 420s on the upside to watch that was tested the previous week, and the downside of that 400. So we are in a pretty tight range right now in the SPYs. NASDAQ, no changes to the chart. We mentioned last week to watch that key resistance test that we did up here, and to see if we have a similar action to back here when we tested and we broke down. We are seeing something similar. We'll see how that goes into this week. But we did that test to the upside, and we are breaking back down to that 11.5 level. So we are watching 11.5, a very key level support, since this is tested numerous times before it finally broke out. And we got that 12,250 upside on the NASDAQ. SPY daily, more technical and moving average look, as well as your triple Qs, your IWMs, and your 10-year yields. A little breakdown on your 10-year yield. No changes to the chart as well. We've been mentioning for weeks on week to watch that upside move above that 3.5%. We saw that upside break, then we saw that downtrend break, and the strength continuing. So with that CPI report, we'll see if the upside move continues back to, it could easily go back to that 4% level. If the upside move continues, or we retrace back to that 3.4 to 3.5 support range. Diamonds on a daily. IWMs, no changes to the chart. Last week, we mentioned that we hit a key level resistance around that 200 level. And watch for a possible retrace first below 195, which we hit, and then a key at 190, which we basically closed at. We're watching this closely. This was one of the weaker charts of the week, especially since the IWMs and the NASDAQ are some of the key parts of watching market overall breadth as the CPI report and inflation numbers come out this week. HYG on a daily with the moving averages and trends. S&P 500, no changes to the chart. We needed a resistance. Correction. We tested that resistance level at 4,200s. Mentioned if we do not break above it to watch 4,100 test. What did we see? A test of 4,100. The key thing here, though, is that we closed below that level. So we believe this is one very important week coming. We have this downside support at 4,000 with the upside at 4,200. We know it's a large range, But look at this volatility we've seen this year, members, already. That could easily be done this week. So we're watching these ranges as key indicators for the next move in the S&P. Your VIX, you see these tests popping, test, popping, test. We see a little pop here. We'll see how that continues this week. Oil, no changes to the chart, members. Last week we mentioned we are currently range bound between the 70s on the downside and 80s to the upside. What happened this week? We basically closed red at 80 at that resistance level. So we continue to watch these levels, this upside to this downside. Any directional move, you could break above this and hit 90 or break below 70. We'll see what happens if you break below 70. But we'll be keeping a close eye on oil since it did have that strength this week. US dollar. Not much move this week. I believe it's all waiting for the CPI report on Tuesday. But we did break that downtrend last week. We had a continued upside move, but we could not break above that 104 levels resistance that we've been watching very closely. Bitcoin, what can you say? It's interesting how this is actually a technical move in Bitcoin. We mentioned last week to watch that 22,500 downside. What happened? That level broke. We ended the week around 21.5. We'll be watching this closely since we do have that gap down here. And this is a player off that momentum inflation play. So we'll see how that works going into the end of the week. And then we have the SMH daily. Another interesting chart with a nice little range being built here closely on watch. So members, that's your week ahead report. We're going to go over the announcement, the TradeXchange announcement real quick, and then we'll answer any questions anyone has. You can email us or add the questions in the chat box. So right now we're going to go over that TradeXchange announcement. Just a few updates. The community room. We are very excited about this part of the service that should be released this month to early March. Initially, we were thinking about having it as a Discord room, members, but right now the thought process is taking the news desk, adding a button where the news desk, let's just always let you guys, everyone know, the news desk will never change. The information and the content in that news desk will never change. That has been our mantra since the beginning of starting TradeXchange, and that will be the mantra moving forward, to streamline information content portal. The community room will be a button that you push that you can either have a pop out of the news desk model for the chat room, or it'll be like a slash down the middle where on the left-hand side you'll have the news desk, on the right-hand side you can have the community chat room. So we're keeping it all in-house. So everyone has the opportunity of utilizing that community chat room if they're interested without having to go to an outside third-party source. So we're very excited about getting that up and running. We appreciate all the feedback we got from our members. And the majority asked us if we could do it that way. That's why it has taken a little bit longer than expected, since we had to retool the whole entire thought process on our chat. The Squawk members, we're very excited. That is going to be up and running as well within the next few weeks. A faster, cleaner, smoother Squawk with the ability for us to add intraday analysis regarding charts or market activity or market feedback we're hearing from traders as a quote unquote type of a small, short, few-minute podcast on our recording section of the Squawk. Will not affect the main Squawk, since it will always be content in regards to market moving activity. But we wanted to add a little something extra when it comes to a little more dissection, I guess you can say, of market and market activity. So we're very excited to add that. Many people have always asked us for our feedback and thoughts on the markets, and we thought that would be the best way of doing it for all our members. The API webhook will be, once we have everything finalized, we'll be able to release our free version of the API webhook for all our members. A lot have asked about it, and yes, that will be released following the release of all our community chat and Squawk updates. And as always, members, you have your affiliate program. Very simple, just sign up. We'll send you access to the affiliate back page where you can track all your visits and keep an eye out on all the the recommendations that you provided. We appreciate everyone who is a part of our affiliate program. As you all know, our main way of growing our business is by word of mouth, and that has been our thought process from the start. And we appreciate everyone that has been a part of that service. We're going to take a quick couple of second mic break before we start to answer any questions. As always, you can ask them in the news desk, the meeting room chat, or the email. We'll be right back. First, we'll just answer a quick question out by Kaleem, and he asked, will the community chat room be broken into categories? As of right now, we're going to have one main room. We will eventually be adding separate categories in regards to, as you mentioned, futures or options, small cap, large cap. So we will be adding additional rooms as time goes on. But the initial release, it will be one main room, which we will have. You'll have access to the TradeXchange news desk team, as well as some very great and respected moderator traders that will be in there as well to ask any question. But it's an open forum for all our members, asking questions, comments in regards to markets, news headlines. It's just a community where we all can get together and help each other prosper in this very volatile market. We had a question regarding on the email side, our thoughts for the week. Members, it's all about the CPI. Let's all be serious. Will it come in hotter? Will it come in colder? And if it does, how are people going to throw the cold water on this report? So it'll be interesting to see all the feedback from the media and analysts and economists in regards to this report. But we believe that number could be the direction in markets for the upcoming sessions. And that's basically the thought process. Earnings season clearly has not affected these markets as much as people have expected it to have. We are at the tail end of earnings season, so we're not even discussing the possibility of having that add volatility to the markets. Clearly, it's all about, in our opinion, the Fed and the CPI. So we'll see what that report will be this week, as well as the comments out by the Fed speakers, and we'll take it from there. We had one other question in regards to our thoughts in regards to Fed Chair Powell, followed by the comments out by the Fed speakers. In regards to that, Fed Chair Powell seemed a tad dovish, and not even the first time he had his Fed Chair presser, but the second on the media interview. We mentioned that disinflationary process beginning. And it's interesting to see that following those comments, the market did see an uptick, yet every Fed speaker following has had a hawkish tone to their thought process. So it's interesting to see, is Fed Powell providing the hope that is needed to fight inflation, and the other Fed speakers are providing their reality of what they're seeing on the hawkish tone? Who knows? But, are we seeing a good cop, bad cop scenario here? Possibly. That's what's adding to volatility as well. How else do you explain a week of no economic data, but volatility in percent moves in this market? So that's where we're at, members. It'll be interesting to see the CPI report, the follow-on comments by Fed speakers, and the action and reaction in markets. Once again, members, we want to thank everyone for joining us this week. Hope everyone has a wonderful Sunday. Happy Super Bowl Sunday. To all the KC fans, good luck. To all the Philly fans, good luck. Should be an interesting game. And we want to thank everyone once again for joining us. Make sure to check the news desk to get yourself ready for Monday's Open. TradeXchange out. Thank you.